Hey everybody, welcome to Trading Capital Exclusive Analysis. In today's video, we're discussing the energy sector. I think this is going to be the next hot sector to see capital rotate into. And why is that? Well, I think oil is looking primed to move higher. But just reading the technical price action in the energy space, you can clearly see many market participants are eyeing up this head and shoulders, this left shoulder, this big head, this right shoulder, and that we just triggered a neckline on the energy sector. I'm not really buying it though. We did technically trigger a neckline, but I'm not believing it. Why? Why am I not believing? Well, I think that this neckline is actually going to get negated for a couple reasons. First off, oil's actually starting to grind higher and potentially break out of a bullish chart pattern. But then, if we look at the support level that we're trading into now on the XLE, you can see this beautiful, beautiful parallel channel. Connecting your high pivots over here to your low pivot. One low pivot, kissed it here. Second, third, fourth, fifth, sixth tap of that low pivot. We're finally shaping up to potentially move higher here in the energy market, and we're at support. Not only have you had a technical breakdown outside of this beautiful long-term channel that connects all the way back to the beginning of the year in 2021, I think we're going to see a market rally in the next coming days to push us back inside of that channel. And then when you also factor in the support pivots that we're trading into on the energy sectors, I mean, just look at this beautiful, beautiful consolidation zone. Massive pivots going all the way back to 2018. I actually have to scroll deeper on the chart, on the weekly chart, just so you can get a better perspective. But these 2018 pivots are big, big support levels because you had a big technical breakdown below it once, below it twice. Then on your last big pullback, you actually held it over here once, bounced again, and now you're doing a simple retest of that support area after the energy market has seen some pretty prolific selling in the recent sessions. And what's really interesting about this candle formation is you put in a beautiful daily bottoming tail in the XLE sector, but it's still finished negative. But that is a sign that maybe a little bit of a local low is in, and expect traders to start piling in and going long here and using this little daily chart wick low as their stop loss. But again, we started to see pockets of strength. You had XOM firming up. It was still negative, but putting in a nice little daily bottoming tail over there. It did have this technical breakdown. You've done a nice full-on retrace, made a new lower low. You're putting in this bullish divergence in the RSI, higher lows in the RSI, lower highs, lower lows in the price action. Then you look at RIG is another one that is looking very, very promising for further upside. This one probably has the most beta in the energy market for oil price action. Another reversal candle making a new nominal low today, and then putting in a beautiful reversal candle to close positive. You can even scroll through many, many energy charts. Another one, Devon Energy, also showing a decent amount of reversal power here. It still closed negative, but it did put in a bit of a reversal candle. Then you look at Chevron, CVX is another one, Halliburton, another one. Not as an impressive reversal as some of the other names, so this one's definitely showing relative weakness, but my members have been positioned in one of the more relative based stocks that in the energy market that look like it's going to have the biggest potential upside if oil starts to really make a higher move to the upside. So even if we look at Halliburton, another company that's seen kind of 2 days of accumulation here, then if we take a look at the actual underlying commodity, which is the most important, oil itself, firstly, I'm going to show you the daily chart analysis. And what I want to show you on oil is we're right back to the neckline. If we can get a breakout of this neckline, you've triggered an inverse head and shoulders. And being the fact that we tried breaking out here on this candle and heavy volume and you got rejected, but still managed to put in higher lows here, odds are we're probably going to break through this next resistance. The inventories today that were released certainly came in positive for oil. They were a much, much bigger drawdown than was expected. So that is definitely helping the fundamental case. Now we just need the technicals to really start to firm up and break out of this potential pattern. But we are seeing this potential inverse. It's looking actually very, very beautiful, very, very symmetrical, a nice symmetrical left shoulder, beautiful head, a nice higher low right shoulder. So this one looks primed and ready. You get a daily close above this, and there's about a 70-75% chance of getting to $82. Right now, there's probably about an 85% chance about getting to $77. So things are looking a little bit more optimistic for the energy market. And if we go to the intraday analysis, what's very, very intriguing about the intraday is you actually today triggered an hourly chart bullish pattern. Here's your inverse head and shoulders. Look at this. Today you actually got a break of the neckline, a clear technical breakout on the hourly chart. This is exactly what you want to see in TA. A perfect technical breakout happens on what? A very, very high volume and a large, large green candle. It wasn't one that, oh, it's iffy, it's a little iffy. Is it on the neckline? Is it right on the line? Is it above the line? Is it below the line? This is clear as day above the neckline of this pattern. It leaves no question about it. It's a huge, huge technical breakout on the hourly chart. And just based off of this little inverse pattern on the hourly chart basis, you should expect oil now to push higher all the way up to about 875.90. And the beautiful thing is that if we get a push up to 75.90 here, I'll just mark that in on the charts. We flip back to the daily chart. If we get a 75.90 close, which is right around here, that triggers the breakout of this larger daily inverse head and shoulder. So I just find it super, super fascinating when you start to look at the different time frames and you start to see the same bullish pattern inside one large time frame, then a smaller time frame, and a smaller time frame. So keep paying close attention to oil, because I do think it's going to be the sector that starts to see capital rotation. And if oil starts to scream higher, that's not going to bode well for probably the equities, because oil going higher is a big, big input cost for many, many different Fortune 500 companies. Look for airlines to show weakness, potentially their miners to also show potential weakness. But then simultaneously, if oil's moving up, what is that going to do to CPI? What is that going to do to the energy component? What if that continues to push CPI? We've already received hot prints and oil's around 73 bucks. What if oil moves to 76, then to 80, then to 82? It starts to really compress those year-over-year comp numbers, and it really starts to skew the energy side of the CPI component, not in favorable for the 2% Fed mandate. So on that note, please definitely do due diligence with these energy stocks. It's certainly a wild, wild-based commodity sector, but it is looking poised at this point in time to continue higher. If you're interested in how I'm trading it, personally speaking, definitely check out my website at tradingcapital.ca, and definitely be sure to email me any questions, comment on videos. Please send a like if you agree, dislike, by all means. I'm open to many different opinions, because we're all here at the end of the day to make money, and not all of us can unfortunately make money in the market unless the Fed is turning on the QE printer. So on that note, thanks you all for being members. Thank you all for being subscribers, and we'll see you on the charts a bit later.